News on 6.
All right, 6:13 right now. Keeping you financially fit and anxiety-free during these difficult economic times is a tall task, but we all need all the help we can get right now. And this morning, hopefully, we have some help for you. We welcome to the program Greg Melia with the Melia Advisory Group, an investment expert. Great to have you with us, Greg. Let's start off with the stock market right now. You know, before the new year, we were having 700-point drops and 500-point jumps, and we haven't seen as much of that. As you look ahead to the next 6 months ago, is the huge fluctuations gone, in your opinion, from the stock market?
I don't think so. I think that actually looking at history I believe we're in what's called a secular bear market, and we've had three, since the last century, we've had three of those, along with three bull markets. Now, I define a secular bear market as where there is essentially no growth over periods of time. If you look back, there have been three of them. We've been in this one since 2000. So having a lot of volatility is very common in a secular bear market. You just essentially never break over the highs of the previous bull market.
So have we hit rock bottom yet?
You know, history would indicate no, I believe not. In fact, usually the second correction is worse. We hit 7,200 in the end of 2000. We've yet to touch that bottom again, and 6,000, in my opinion, is not out of the question.
Oh my goodness!
Yeah,
so if I've got a 401k, do I just get out of stocks and wait it out?
Well, each person is different because it's based upon their age and their ability to tolerate risk. We primarily focus on those that are in retirement, about to retire. And for that age group, risk is really difficult to tolerate, right, because on a historical bear market, we're only about halfway through this.
Okay. Well, let me ask you this then, because people say, oh, hey, if you're not going to retire for 20 years, just stick around in it. But the way my 401k works, can I get out of stocks today and get back into them in 3 months? I mean, right? I just click and drag and so forth, and I'm back in, right? Or wrong?
Well, one of the ways you can make money in a historical bear market is by actively trading. It is extremely difficult to do, though. It's very most people do not have the time or the energy to watch it.
Or the expertise.
Or the expertise to watch it as closely as they should.
Okay. There's some kind of stimulus plan that's going to get out there. It may be cut down to $800 billion. Just as an investment guy, as you look at what's in there, I'm sure you've followed this a little bit. Is this going to be the jump start to the economy?
They're already acknowledging that it's going to be years before it even has an impact on our economy. I think we're really facing three significant issues. First one is the fact that they are printing so much money, and the $10 trillion in debt, that they're trying to stimulate the economy, that either we're going to have inflation, which isn't good for those who are about to retire either, or we're facing what's called deflation. And you're starting to hear more and more people talk about deflation. Deflation is actually a very evil, a lot of folks don't really understand how deflation affects us.
They like cheap gas prices, but it can get out of hand,
well, sometimes cheap prices are good, but
right.
Example, like deflation comes as a result of, say, the automobile companies right now under such stress because people, they just announced the other day that savings are up 100% now because people are holding on to their cash and they're not buying things. Right. So you have less buyers out there to buy the cars. So consequently, the dealers start offering better and better buys for those to lure those who can purchase to purchase.
Which is a good thing, but again, if it spirals out of control, suddenly nothing's worth anything, right?
It really isn't a good thing because what happens is the folks that are making those cars, there are less cars being sold, so there are less jobs. So as a result, they start laying off people. They announced today, or the unemployment is supposed to be announced today, and they're expecting 7.5%, which is unbelievably high.
Yeah, those numbers coming out later today. We're out of time for today. I know you deal with folks getting ready to retire, and maybe we can have you back again and maybe focus in on those folks a little bit more right now. But a great overview of what's going on with the economy right now. Greg, we appreciate it very much. And again, the Melia Advisory Group, they're located on Skelly Drive in Suite 600, and you can give them a phone number at 794-9290, and you can also look at the newson6.com under financial fitness for more information as well. All right, thank you once again, sir. Right now we're going to turn things over to Alan Crone, who's going to take a look at the fitness of the weather today.
Well, the numbers